Whoa. Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 9th, 2023. And I'm coming to you late today. And most of you who are subscribed will know why I'm late. It's because I was working. This is my full-time job, trading. So when there's massive volatility, I have to work. I have to monitor my positions. I have to get in new positions. I have to do all this kinds of stuff that I'm not able to do when I'm on stream, right? When I'm on stream, I can work a little bit, but I can't really divide my attention like that. Most of you know trading is, a high performance sport, and it really takes everything to do properly. And even then it's not easy. Yeah. So the title is Experts Are Bearish, Send It. And I'm still really bullish, guys. And I'll tell you why. I'm still really bullish, okay? Obviously, we've experienced a drop today, mainly in Bitcoin, okay? Mainly in Bitcoin. That makes me even more bullish, okay? That the drop is mainly in Bitcoin, not necessarily in the alts. The alts have dropped, of course, right? But not as much on average as Bitcoin, okay? Which means if we look at our Bitcoin dominance, we should be able to see exactly that. So let's take a peek at the Bitcoin dominance. We're going to do a lot of things today, so I hope you're ready. All right, so let's open up Bitcoin dominance. And let's look at what it looks like. It should be going down, okay? Because alts are not dropping as much as Bitcoin, which is something that you expect in a proper bull market, right? When there are big drops, in the aggregate, right? Because you have to also factor in their rises. So let's just look at Bitcoin dominance. Hope you're doing well, by the way. In all this volatility, it seems like, it's the end of the world, but it really isn't. And this is precisely where you make your hay. These moves, these big moves, right? It's not necessarily about, let's talk about it in a second. First, let's do this. Okay, yeah, you see this. This is what we were planning for quite some time. I had this, a bear flag. This bear flag in for quite some time. And look what just happened. Kind of the beginning of this impulse to the downside. We've said this before on the channel. The bull market happens when this starts to go down. Okay, that represents a drop in Bitcoin dominance. That represents alt season. That represents everything going up. And because altcoins are by definition lower market cap than Bitcoin, right? Then they're more volatile. They go up faster, more than Bitcoin. You should see Bitcoin dominance come down. For the longest time, we were in this pivot, okay? We came up to resistance, pivot, and now this pivot is finally breaking down. That makes me really bullish. That's one of the things that I'm seeing. Okay, I didn't even look at Bitcoin dominance, to be honest. I was just looking at my altcoin positions, right? I was like, okay, that's interesting. I'm like looking at my Bitcoin position, and I'm looking at where I can find support, but like my really low cap altcoins, like my shitcoins, low cap, are not moving as much. They're kind of just hanging out, right, in this dump. So, okay, that tells me something's going on. Bitcoin dominance is going down, and that makes me more bullish. So that's case number one as to why I'm bullish. And yes, I understand we went down, but you don't necessarily get bullish when the price goes up and bearish when the price goes down. That kind of goes back to the title of the live stream. Experts are bearish, send it. Because most people, a lot of quote-unquote experts included, simply look at the immediate short term and react. Okay? So they were bullish up here, but then we come down here and they're automatically bearish. But that doesn't make too much sense if you're looking at the charts carefully. So let's do that. Let's look at Bitcoin, okay? Because obviously that is the biggest mover. And let's close this for a second. Okay, so we're looking for support. Why am I bullish? Okay, first and foremost, let's state the obvious. This whole leading diagonal business is invalidated. Okay, we all know why, because in a leading diagonal in Elliott wave theory, when you have a wave, the leading diagonal has to maintain that trend. Okay, meaning this low can't be broken by this low. Okay, that already happened. That is invalidated. It can no longer be a leading diagonal. What it most likely is, what we're most likely dealing with, is a flat correction, a 3-wave move. Okay, now the question is, where is it going to come down to? Okay, now how do we measure it? Very simply, a flat correction is measured, or actually a flat correction in an impulse, because this is still, to me, an impulse. Okay, we can pose the question whether it's a pure impulse or a zigzag or a corrective impulse, but it is an impulse nonetheless. Okay, so what we want to do is take our Fibonacci retracement tool and measure from the bottom to the top. The orthodox high is right here. Okay, and right now we just hit the 382 Fibonacci retracement level. That's significant. That's significant because that is the minimum retracement level for any proper impulse. Okay, a complete impulse. Okay, and what I do all the time, you know, if you're subscribed to the channel, you'll know the way you distinguish a pure impulse from a corrective impulse, being a zigzag, right, a 535, is you use the time component. All of these candles that we look at are plotted with two things in mind, with two factors. You have the price and the time. So the time actually tells you if it's more likely than not a pure impulse. So what you can do here is this. You take your time component, your ruler. Let's just use this. Whatever. This is fine. Okay? So from beginning to end, and you kind of have to know the anatomy of an impulse. That's an ending diagonal right here. See, okay, let's use the other tool so I can annotate while I show this. Give me 1 second. Let me just find it somewhere here. I just don't like the bar that has all your favorite tools on the screen. I don't like that, the real estate. That's why I can never find anything. Okay, so from the beginning all the way to the end, this is an ending diagonal here. This is why I'm dragging it all the way here, by the way. Okay, this may be the top of the move, but it's not the orthodox high. The 5-wave impulse, or purported 5-wave impulse, starts from here and ends there. Why does it start from here? Obviously, it can't be this because this is corrective. There's no way you have a pure impulse where the time components don't match like this. That can't be a wave 1. That can't be a wave 2. That's got to be a zigzag, if anything. And this is a flat correction right here. So that's why I'm starting here. That's 34 days. Now, we do the same thing for the corrective sequence, or our purported corrective sequence, because this is a trading thesis. And we go from here all the way here. Okay, and that's 35 days. Guys, there is almost perfect relationship in time, temporal relationship between the rise up and the fall down. Okay, when you look at that, according to Elliott wave theory, it suggests that you're dealing with a pure impulse where you have a wave 1, wave 2 relationship. So this is going to be my thesis. If it's not a pure impulse, you have to come down to a minimum of the 0.5 Fibonacci retracement level. Okay, because that we know is the minimum retracement level for a zigzag. But given the time component, it's unlikely that you have such parity in time without being a pure impulse. The chances, zigzags aren't typically respective of the time component. So I'll say this. It's more likely than not, again, all of this is probabilistic. It's more likely than not that we're dealing with pure impulsive price action. This was 5 waves up. This is 3 waves down. And that now you're essentially hitting your target, okay? You're essentially hitting your target, because your target, we know, has to be anywhere between the 382 and the 618, okay? But there is a decent amount. Let's put a line tool here. There is a decent amount of trading action in this region right here. Okay? There's a decent amount of trading action, which should create some support. This should create some support. So this 382 may very well be around the area where we can expect some support for this move, if this indeed is a pure 535 5 waves up, 3 waves down scenario, wave 1, wave 2 scenario. Okay? And then, if that's true, I'm getting a little ahead of myself, but let's do it right now since we're all looking at the same thing right now. You should be able to project wave 3 to a minimum of the 1618, which is about the 40K region. Okay? Between the 1618 and the 2, actually, right? Let's get rid of this. This is not really relevant right now. So between the 1618 and 2, and that really works out. Let's say wave 1 and wave 2 went like this, then wave 3 would more likely than not come around to the 1618 to 2 Fibonacci extension level, which is where we typically expect wave 3 to end. And then you have this dotted or this dashed line, which represents some significant resistance. So this makes sense if we were to see a wave 4 in this region. Okay? So that's my trading thesis as everything stands right now. Okay? Certain things got invalidated, like the leading diagonal got invalidated, the rising the rising channel got invalidated, like all kinds of things got invalidated, but the bullish case is not invalidated. Here's when the bullish case becomes invalidated. If you took our Fibonacci retracement tool and you saw that price extended beyond this phi ratio at 18.9, say $19,000, there your bullish case becomes invalidated. Okay. Since things are moving so fast today, let's look around, okay? Let's look around. So, let's look at ETH really quickly. So ETH is kind of doing the similar thing, okay? You can say that ETH put in 5 waves up and 3 waves down. Let's also do the same thing and measure to see the time taken for the 5 waves up. Okay, that's about 20, let's say it goes all the way here, right? Because this is the orthodox high. It's 34 days, okay? 34 days right there. And then down you have almost exactly 34 days, okay? So this is, I think, also a similar occurrence with ETH. The thing I'll say with ETH though, I'm looking at this. Let's see. 1 second. Let me see something. One sec. Just checking my work, making sure I don't need to act on anything. Okay. It's always difficult to trade and stream at the same time, but whatever. I'm doing it. Okay, so synthetics. I'm just keeping things. There are a couple things I have to look at really quickly, so I'm gonna do that. Okay, just two things I'm gonna look at. So first, let me just finish what I was saying with ETH. I would do the same thing. I would pull the Fibonacci extension or Fibonacci retracement tool from the bottom. I would take this as the bottom right here. I think this is a valid wave 1, wave 2 right here, all the way to the top of this ending diagonal. And similar to Bitcoin, we're just hovering around the 382. We're just hovering around the 382 here. Let's see. Let me fix this right here. Because one of my ideas is that with ETH you find support. See, the bottom of this is goofy. I don't know where the bottom is here. This is a little... Is it here or is it here? It's hard to say. In any case, that's the idea. That's the idea for ETH. Okay? Both for ETH and Bitcoin on a smaller time frame, I don't think we're close to finding support yet. On the 4-hourly time frame, doesn't look like it. You know, the second you get a big bounce, you know that you've hit that initial break of structure. Okay, you found support. I don't know that this was it here. This may, but I don't think so. It may very well just be an ending diagonal situation right there. So we can look at that. Typically the volume will tell you, right? You'll get that capitulative volume. Let's see. Okay, that's decently big volume right there for that move right here. So it's possible. It's possible. It's possible. Let's look at ETH. Yeah, maybe an ending diagonal situation. I don't know. But yeah, obviously you're looking for a big bounce, which signifies an initial break of structure, which should tell you that you've reached some sort of support level. Okay. There were a few things I wanted to look at, and I already forgot. It was not that. Not that. Excuse me, guys. I'll be right with you. Okay, yeah. Audio and... Just audio for now, yeah. Okay, just audio. Let's have a look. Okay, I'm gonna peek in on this position. Okay, let's get rid of the volume. Okay, let's go on the higher time frames. Okay, so a lot of these are doing exactly the same thing. You see, it's an impulse followed by an intra-wave correction. it's not bearish in the aggregate. The move is still, see, this is still the trend right here. Very clearly, right? Very clearly. This is a trend, and this is a three-wave counter trend. That's still the case. And the question is, where do you find support? So, for something like this, do you find support at this level, on these levels, right? That's the question. There's nothing that stands out as a perfect support area. So we dive into the smaller time frames. Let's see. Let's see. All right, let me fix one thing. Okay, let's see about that. So on the higher time frames, you would do something like this. So yeah, that's what I'm seeing now. Obviously, before I was thinking that these areas were sort of consolidation reversal channels, where obviously they were not. They were distributive intra-wave corrections, so a wave 4, as it were, of a certain degree. So now I think the name of the game is, if these are truly impulses, right, for the most part, you're finding support. You're going to find support between the 382 and the 618 somewhere. Okay, so we've already peaked into the support areas. So the question is, where in this area can you find support? So that's like the name of the game if you're looking to take positions to the long side, if you're bullish, as I am. So let's see. Okay, let's see. Okay. Yeah. Yeah, that's the name of the game. That's the big question. Okay, I gotta check another one as well. Let's check Dogecoin. Dogecoin. Okay, let's check that. Okay, Dogecoin. Okay. So it looks as if you've come back all the way down to this midline. That should be an area of support. Now this is obviously different than what we saw in Bitcoin and Ethereum and what we just looked at, Audius. This is clearly a flat correction because you've retraced almost 100% of the move. Right here, you went up and came all the way down. All right, let's protect that position. Dogecoin. Let's see. So the issue with flat corrections is there's not really a clear area. Like with, with impulses, 0.382 to 618. That's your support. Here you kind of have to look at support and resistance. You have to look at support and resistance here. So let's do that. I think this midline is a decent amount of support, but you see, it's so hard to trade flat corrections because first you identify the flat correction, your legal retracements all the way down to the 1618. So it's just, it's not a good risk to reward. So yeah, it's harder to trade. It's much, much, much harder to trade. Let's see. But yeah, here I'm basically going to play off of a support and resistance, right? Seeing that midline as strong support, given that we're above it, and I've seen evidence of support here, and there's a bunch of price action here. This was resistance here, so I'm just going to bet on that. That's going to be my bet. All right, all probabilistic, and win some, you lose some, but that is. Let's see how that plays out. Akanksha says, hello, Akanksha. Things are well. So Akanksha says, see, I told you BTC would retest 20 to 21K range because it did not fully shake weak hands just of yet now. The bear sentiment is prominent. We will see that epic rally to 30 to 36K. Yeah, you were right. 20 to 21K is being retested as we speak. Yeah. Well, let's yeah, I'm still bullish, but yeah, that was definitely correct. That move that we're getting is for sure. Oh, I'd be remiss if I didn't mention the DXY. So I mentioned the Bitcoin dominance, right? This is one of the things that makes me bullish. Another thing that makes me bullish is the DXY, okay? And the fact that we are finding some resistance and breaking down from that resistance, okay? This is our main indicator on this channel that, I use all the time, and more or less in the aggregate on a high time frame, specifically the monthly time frame. If you track Bitcoin as far back as it goes and the DXY as far back as it goes, you'll get about 10 years kind of a relationship, and that relationship between both the DXY and Bitcoin is almost perfectly inversely correlated, okay? And so when you see the DXY go up, Bitcoin tends to go down, risk-on assets tend to go down, and vice versa. Here, we've experienced some resistance and now put in a three-wave move, and right here we're dancing on a 600-day support, which should eventually break down, which should give you that big move in crypto, okay? Because up until this point, for a month and a half or month, I don't know, it just seems like forever, the DXY has been putting in this move and then this subsequent, so this move is more specifically something like this, and then this subsequent distribution channel. Okay, I have this as a distribution channel. I'm not bullish, or I'm not bullish on the dollar I'm bearish on the dollar, and I believe that the dollar's in a bear market rally. This is a bear market rally, okay? And this is why I'm still bullish. This is number 2 reason, main reason why I'm still really, really bullish. I'm not bearish. A lot of people are bullish on the dollar. They're seeing this continue to go up. They think that the 12K Bitcoin retest is imminent, all that stuff. And, they think we're in a bear market rally. I still think we're in a bull market. We're in a bull market. But in a bull market, just like in a bear market, any market, you get pullbacks. And as long as the pullback is commensurate with a bullish pullback of whatever impulse, then, that's a proper bull rally. For instance, in Dogecoin, I know we're not going in order, but whatever. You went up all the way, you came down all the way. Dogecoin has yet to enter its bull market. Okay? Because if it had, it would have put in perfectly impulsive price action and come down commensurate to that perfect impulse. And that retracement is the 382 to 618 Fibonacci retracement. Okay? We didn't get that. So, not everything's going to be doing exactly the same thing, but you're going to see versions, sort of similarities throughout. Okay, so just let's keep going. Let's have a quick look at Bitcoin, what it did, because everything's kind of happening right now. So we need to stay on our toes. And trading is very lucrative. Trading is a great job. You have a lot of freedom. Earning potential's uncapped, essentially. But it is really challenging. And it's really challenging. And when you do work, you work a lot. Yeah? So it's like nonstop. It's like nonstop. Let's see. Like I'm doing this live stream, but I'm also like working. I'm also like monitoring the positions. I'm also, looking and seeing and reading and reacting. Okay. Like I have a thesis. I have theses. I have a certain idea of what I'm looking for, but I don't know exactly how it's going to manifest, how it's going to play out. Still waiting for this the loss of this level. I think the loss of this level will it will yield a massive move in Bitcoin and cryptocurrencies. Right? So we're looking to lose this level in the DXY, and we're close. We're very close, okay? This is a big reason why I'm bullish. Big reason. Okay. Let's continue. And guys, I never say this, but I will remind you, please like the video, share, and subscribe. I have nothing to sell. I'm a full-time trader. Everything I do is just for fun. This YouTube is just for fun because, I'm trying to do things that I enjoy. That's one of the luxuries of, working for oneself. And I enjoy sharing my ideas, my trading ideas. I'm passionate about trading. I'm passionate about technical analysis. So I like talking about it. So that's what this channel is for. But, the likes, I don't monetize anything, but it would be nice to see if people are getting value, that they're liking the video. Cardano is just so close to, it's right. So look, I think Cardano is also doing what Bitcoin and Ethereum did, put in 5 waves up, 3 waves down. And it seems like forever, but to be honest, guys, it's almost, I wouldn't be surprised if we were dealing with Cardano here with a 35-day up move and a 35-day down move, just like Bitcoin and Ethereum. Guys, it's uncanny. And this is just a reminder, like, I love technical analysis because it's in something so chaotic, in a system so chaotic, you find order, you find regularity, right? I don't know exactly how this impulse is going to look like. I don't know if it's going to print an... Whoops. Sorry. 1 second. Okay. There we go. I don't know. I didn't know that it was going to print this ending diagonal. I don't know what kind of correction this is going to look like. But I know, according to the guidelines, the principles of Elliott wave theory, you get 5 waves up, you get 3 waves down. The 3 waves come between 0.382 and 0.618. If it's a wave 1, wave 2 situation, they take around the same time. You see that over and over and over and over again. You can't make this stuff up. By virtue of seeing it over and over and over again, I trade it. That's how I'm able to make money in this market, even when I'm wrong in terms of, you know, when exactly we're going to go up. But if I knew that this was a wave 1, I would have just counted 35 days from the top, right? Because you can literally do that. You can literally time the market like that. 35 days up, okay? Now you just open your shorts or just sit on your hands for 35 days, get back in, and you go to work. It's amazing, right? And this is not something I discovered. This is not something I made up. This is something that human beings over the course of history, trading through Elliott wave, have found these relationships. So this is kind of why it's useful to study these things and not just, oh, you know, listen to some random guy on YouTube, myself included. You got to do your own research. A lot of people have no fucking clue what they're talking about. And they're calling for, you know, much lower prices. They're saying, you know, Bitcoin and crypto is going to go to shit. Like, honestly, if it was, then why isn't it retraced all of its gains from January? And it went up so much, right? It's just ridiculous. But you got to do your own research, right? And the experts typically are a counter signal, counter indicator, because they may get the immediate short-term moves because of their indicators or whatever. But to be honest, the money and the trades are not made in corrective sequences. The money's made in impulse. The savvy trader is looking for this and more of that, and guarding against this, protecting positions against that, hedging against this, and finding this as an opportunity to buy more, to be honest. Yeah, you can call it catching a falling knife, but in context of the fact that that is corrective of an impulse, it's not. It's the smartest thing to do. I'm gonna add a little bit to this position. Nah, I'm gonna leave it. It's fine. Give me 1 second. Let me just scroll, check. Just checking. Give me 1 second, guys. Okay, I'm gonna check one more thing. Let me check that. Ooh. Give me 1 second. I'm just managing. Give me 1 second. I'll be right with y'all. Okay, so... One second. Okay, and there's one more. Here. Okay. Okay. Yeah, that's okay. Okay. I'm sorry, guys, I have 26 different positions I'm managing. I would not recommend this. I literally do this for a living. That's all I do. So it requires a lot of attention, a lot of time to manage these positions, to make sure like the margins are healthy, to make sure, you know, everything's fine. And, you know, I have to actively manage them because things change, things get invalidated, and you know sometimes I'm taking margin from one position, putting it into another. It's like it's a whole thing. It's a whole thing. All right, let's see. Oh yeah, this one. I almost missed this. Um, okay, I have to do one more thing. This is why I was late, because I was just doing this the whole time. Let's see. Let's add more here. Okay. It's like you work, and then when things change, and then you don't work for a while. You don't work for a while. Or at least you don't work as intensively. There we go. Okay. Let's see. I wanted to look at that. Moonbeam. Or Moonbeam, I think it's called. Okay, so this is... Okay, yeah, this is another case of that 5 waves up, 3 waves down situation. You can see that 1, 2, 3 waves. You can see that the support, the mathematical support's around 740 here. Okay, cool. About 701 I want to be at. Okay, right here. Okay, got it. Okay, so that is good. And then looks like this is moving. Theta. Let's see, theta. Yeah, everything's moving now. This is another instance of that. I would put this right here. So theta. Okay, I'm looking. We're getting really close, really close. Really close. This is where everything is decided. Let's see, link. was right there. I would hide it over here. About $5.99. Okay, the ugly thing is sometimes these look like impulses, but they can be flat corrections. So I'm just going to measure this really quickly. So that's about I'd probably measure it here. Now this is a flat correction, I think, for link. I think this is a flat correction. I'm going to explain myself in a second. Let's see. Okay, so I got this is moving. This is moving. This is moving right here. It's action packed. We are soon going to find support. Very soon going to find support. This is moving. Okay. Let's see. Okay. This is tough. It's tough to trade when things are so volatile. Tough. It takes a lot of attention, a lot of attention to detail. Okay, here we go. And as you guys know, I have so many positions. I'm like trying to keep up, making sure. Alright, let's see. Okay, so far so good. Okay, that's good. Okay, this one. Okay, let's see, let's see. Yeah, this is impulsive. That's what is meant by impulse. You just keep going. In so little time, so much ground is covered. So little time, so much ground is covered. Where do we find support? That is the question. Okay, let's see. Let's have a quick look. So A says Fed kind of killed any rally attempt. See, that's what I don't believe. I think in terms of the macro, let me just keep that up. In terms of the macro, a lot of experts are saying that exact thing. But what we're going to see is you're going to get a massive bounce because the DXY is overheated and it's going to break down. And when it does break down, everything risk on is going to rally. It's nothing to do with, a lot of experts don't do technical analysis. They'll look at the charts, but then they'll speak to these kinds of ideas that are well and good, but at the end of the day, you know, the news is the news, the charts are the charts. And if the charts show that the dollar is going to break down and it's at resistance and it's showing weakness, then you're going to get a rally, right, in your risk on assets. It's just, you know, it doesn't matter what Jerome Powell says and does. Like, what matters is, it does, but at the end of the day, you should be able to see all of that through, sorry, let me get in a position real quick. Let's see. Sorry, 1 second. I can't speak and do things. You guys know that. I gotta focus. This is very nice. Oh, this is very nice. It's very tradable. Very tradable. Very tradable. There's two I'm looking at here. Okay, so this is a little more complicated. Let's see. Okay, this one, let's focus on this one first. Let's go even smaller time frame. Let's look for divergences. Let's try. No. Yeah, let's try that. Something like this. Nah, that doesn't work. Zoom out a little bit. Okay, let's just use the fibs. And then let's look at what it looks like. Okay. I'm trading, guys, so I'm just trying to focus here, making these entries. Let's have a look and see. There's still some room to go. Haven't found support yet. Yeah, this is a cascade. This is a cascade. This is a cascade. I'm gonna hold off. I'm gonna hold off. Actually, what I'm gonna do is I'm going to play a little defense here. Okay. Okay. You know, one of the reasons I play classical music is because it helps me be calm when I'm trading. I don't know if everybody knows that. But yeah, this is a high intensity, dealing with a lot of money. You need to be calm to execute, or else, you know, you can't do it. You can't make it. Let's see. Okay. Alright. It's just coming down quick. So volatile. So volatile. I know this is not the most entertaining thing, but I gotta trade, guys. Okay, let's see. What else? I wasn't able to do this in the beginning. Back when I started, oof. Stomach in knots. It's crazy how far we've come. Alright, we're gonna find support on 2000. Is that going to be our support? Let's see. Okay, we're getting some sort of reaction here. Is this the reaction we've been looking for? Is the question. That's fine. Okay. Or did I say 2,000? I meant 20,000. Okay. Let's look, let's zoom out and see what this means. This is unlike most of our streams, but hey, whatever. It's less theoretical, more practical. Actually doing it. Doing it. Okay, so we're in the thick of this right here. We're in the thick of this right here. So this right here should pose some sort of resistance to the downside, meaning it should create some support. So let's see what that looks like. If we do indeed get a bounce there. So you're coming down to around the 0.5 Fibonacci retracement level, which is where most of those wave 2 retracements come down to, between the 0.5 and the 618. Obviously, anything between the 382 and the 618 is legal, but typically you come down between the 0.5 and the 618. Things are just freaking going. DYDX is in the green. Didn't move much. Let's see. Okay, let's see, what did Ethereum do? Ethereum came down to that mid-level. Okay, that midpoint right there. If you're gonna find support, it's likely going to be at that mid-level, right on that 0.5 Fibonacci retracement level as well. Right on that 0.5 Fibonacci retracement level. Yeah. Okay. Okay, just checking. Has to be one of the more stressful jobs. But, you know, being a cop, perhaps firefighter, they're more stressful. You know, I'm sitting in the comfort of my own home doing this, so this can't be too bad, yeah? Okay, so let's look and see. Okay, let's look and see now if we have a better entry for these. Or the same thing. So you're pretty much at the 0.618 here. I think this is where you find support for Litecoin in particular, but also for these other assets. I would not be surprised if we started bouncing seriously here, because you're at the 0.618. Okay. This would actually be a great place to take a trade. Which is what I'm going to do. Okay, let's see. Okay, and then I'm gonna have to do this for one more. And this I would not call this catching a falling knife, just because you just saw a really, really strong support level that you identified, which is high probability. So yeah, I think that is a good trade. Okay. I'm just moving some stuff around. Okay. Let's see. Let me check one thing here. Reserve rights. Oof. So this came down like just like the others in what looks to be another 5 waves up, 3 waves down situation. Let's see. Okay, you're right at the 0618 right here. Does it hold? That's the question. I don't think this is a pure impulse, because it took 50 days to go up and it took only 20 days to come down. So I think this is a zigzag. So this is a little different. Yeah, okay, cool. Let's check. So much volatility. Gotta make sure things are a-okay. So Amit says the downside move could be 2 things, either a wave 2 correction or a wave 1 correction. If it is a wave 1, welcome 3K. I don't, you guys know what I think about that. You don't just put in waves randomly on a high time frame, especially if you're going in one direction, right? If you chart Bitcoin on a really, really high time frame, you've never put in a solid wave one on a on a cycle degree or on a primary degree. Okay, so Amazing Videos of the World says, heart, is Bitcoin going back to 11K? I don't think so. I don't think so. Okay, I don't think so. But yeah, I've been explaining what I think is going on with Bitcoin, what is going on with the altcoins. Rewind if you just come in, but I think this is a pullback based off of the fact that we've gone up impulsively. And I believe this DXY is looking to break this high time frame support, this 600-day support, anytime now. Okay. Let's go back. So that's RSR. Okay, we did get a... Nah, I wouldn't say that's a big bounce. It is a bounce. It's not a big bounce. It can turn into a big bounce. So we'll see. What's ETH look like? It did also get some sort of bounce. I do believe that this 0.5 may prove to be where things bounce for ETH, for Bitcoin. Especially for ETH, because you're at that midline. Okay, let me see something. What did I... Oh, yeah, that's right. Okay, so... Okay, yeah, that's what I'm doing. Okay, so let's look at something like this. Okay, so like, yeah, a lot of people are going to be bearish here. But remember, this is exactly what happened. You put an impulse in, you put 3 waves down. This is actually when you want to buy, when you want to load up. But, you know, people don't like to buy support because it's scary, but it's actually the best move. I'll add to the points that make me still bullish. One of those is the fact that we are, it's the second day after a full moon, okay? And typically research shows that 0 to 3 days after a full moon, we have local market bottoms, okay? So this would constitute that period in time in which we find local market bottom. So that would not shock me. That would not shock me. I'm still bullish high time frame. Let's keep that fib on Bitcoin here. Okay, right here. Okay, so this may be, well, I think, based off of this trading thesis, based off of the idea that this is a 5 waves up, 3 waves down move like we're seeing throughout the market, it's likely that we get a bounce in this region, more specifically in this region, okay, between the 0.5 and the 618. So I would look for a bounce sooner than later. This is where I'm taking my trades that I want, my like new trades that I want to take. So don't be surprised if we get a big bounce at this level. Obviously, because you've come down, on some level you're going to have to put in some consolidation reversal. But who's to know what that looks like? You know, that could be a really quick consolidation reversal to absorb the supply dumped on the market here, or it could, you know, it could last a little longer. But if we're in pure impulse, it's going to be relatively quick. It's not going to be like, you know, too slow, because this bounce is becoming substantial. I think we hit 20K already. Yeah, we hit pretty much 20K and we bounced a few $100s already. This may be your initial break of structure right here. This may be your initial break of structure. All right, guys, I'm going to run to the bathroom. I'll be right back. I'll be right back. Let me just write something. So, hey guys, I'm back. So, luxury crypto trade says, yes, 11333. What do you mean by that? What do you mean by that? Okay, let's go. I want to look at a couple things. I want to look at my DYDX trade, and I want to look at what's the other one I want to look at? DYDX and Dodo. That's it. Okay, DYDX and Dodo. Managing all these positions isn't easy, but it's very, very, very nice when they play out. And I've gotten wrecked so many times, almost like practicing for this moment. Like, I wouldn't be able to do this had I not had experience getting wrecked and not getting wrecked, you know, leverage trading. And not to say that people should leverage trade. It's not for everybody at all. Great instrument, but you kind of have to know what you're doing, or else it can ruin you, literally. Okay, let's see. So DYDX is also putting in what I think is that wave, 5 waves up, 3 waves down situation that we're seeing throughout a lot of these charts, right? And let's just take the time component here. So 32 days up and about 35 days-ish down. There's some comparability, right? That's a legitimate wave 1, wave 2 scenario. We've come down all the way to the 0.5. That's almost where you can expect to find support between the 0.5 and the 618. Most wave 2s come and find support between those areas. Let me see. Okay, yeah. I see what I did there. Dodo, let's see. So Dodo came back and retested this high time frame resistance. Basically, Dodo just retested its bear market accumulation zone. Okay, and that's why I put this line right here. That may be all she wrote. And that is very bullish. Okay, I always say that people like to look at green candles and say bullishness and red candles and say bearishness. Actually, the true measure of a move, if it's bullish or bearish, is in the counter. So in a bullish scenario, you want to you want to really pay attention to the retest or the retrace, right? The waves 2 and 4 tell you the character of waves 1 and 3. Just like the light is only known by the dark and vice versa. Like, you can only know light because you know dark. And so that's, I think the most useful way to really understand where you are and what you're doing. So this is 45 days up and about 17 days down. So there's no way that this is pure impulse. This has got to be a zigzag, and zigzags are messy. Sometimes they wick a lot. So I would not be surprised if this wicked down a little below that 0618. Okay. I'm adding some margin, or I'm just calculating margin here. Let's see. Okay, yeah. So that is good, and with that, I would like to do what? What am I doing with this? Let's check Algorand. I'm just going all in no particular order. If there's anything you want me to look at, just let me know. But right now I'm just focusing on these. Let's go on the daily here. I'm focusing on these positions that I'm trading. But yeah, if there's anything you want to look at, just let me know. Let's see. Around here is, yeah, this is a flat correction for sure. This is a flat correction. The reason I'm saying it's a flat correction is because it's already breached quite clearly the 0618. So here must have been a base, 1, 2, and then this is the third wave. Just jumping down here and having a closer look. Yeah, that's it's quite clear here. I'm just going to take this from here. Yeah, you're clearly already, you've passed the 16 or the 618. So next stop is the 786. Okay, and these flat corrections, research shows that they typically find, a lot of flat corrections find support between the 786 and the 914. That's why I have them on these fibs here. But trading flat correction retraces are not easy. Is not easy. It's actually kind of a bad trade if you can avoid it. Avoid it because you can retest anywhere between the 786 and the 1618. So it just makes it a bad risk reward. But, whatever. Okay. Let's see. Alright, let's check Cardano next. Alright, things seem to have calmed down. Let's see what Bitcoin's doing. So we're going to check Cardano, going to check Bitcoin, see if we're in some sort of consolidation reversal or this is just intrawave correction for more downside. Let's see that. Okay, so let's check Cardano first. Okay, that looks like a somewhat of a significant bounce, especially given that we're in this region here. Okay, this is the region we would expect a bounce, and we've gotten some sort of bounce here. We have the midline of this bear market accumulation channel. Okay, we have the 0.5618, anything between the 0.382 and the 618, but we have more particularly the 0.5 and the 618, where most of these wave 2s find support. Is this a wave 1, wave 2 situation? Let's look at the time. So you got about 34 days up and about 34 days down, or 32 days down. We've measured it before, right? So this is what we see in Ethereum. This is what we see in Bitcoin. 34, 35 days up, 35 days down. This is very likely a wave 1, wave 2 situation. This is very likely the bounce that you're looking for consolidation reversal move to take you up and out into wave 3, this primary wave 3, or whatever degree you want to call it. So that's Cardano. Bitcoin. Can we say the same thing for Bitcoin? Let's go on the smaller time frames, even smaller time frame. Okay, was that a legitimate bounce? That's the question we're posing. Let's get rid of this. Let's put all that back. I don't know why I did that. Okay, let's turn on our momentum indicator. Obviously, everything's oversold because, you know, that's what happens in an impulse. But this 15-minute time frame is overbought. Okay, one of two things: either you continue to go up and you prove this to be a bounce, and you target wave 4 of the previous trend, you know, to initiate your consolidation reversal pattern, or this isn't it and you turn down and you come back down. Either way, I do not believe that there's much left in terms of downside price action for this impulse, okay? Because of what I've been saying in terms of like looking at this as a wave 1, wave 2 situation. That's 35 days, that's 35 days. The day is about to be up. Obviously, it's not always exact, but relatively speaking, we can expect this move to conclude sooner than later. Also, you have your DXY, which is graciously just now starting to roll over from this high time frame support area of what, like 600 plus days. It's like 620 some odd days. Okay, we have the hourly time frame for this DXY is shot up. Okay, it was all the way down. The 4-hourly time frame is crossed bearish, but it's all the way, it's in oversold territory. The dailies come back up a little bit. It should come up a little more at the close and the open of the next daily candle. Okay, so that'll prove to be bearish divergence. Okay, so what you may see in the DXY is something like this. Given this high and this high, right, you may see a bearish divergence like that. Okay, which indicates a continuation of this move down, right? If you make the high, you start to roll over in the momentum, you show a lower high, higher high on the price action. So let's go back to, so we looked at Cardano, we looked at Bitcoin. Is there anything else? Let's see. Okay, Bitcoin. I don't know. It doesn't look very strong, to be honest with you, in terms of a bounce. But sometimes the bounces happen sectionally, meaning you get a little one and then you get a bigger one from that beginning. Okay. Okay, Cardano looks like a legitimate bounce. More legitimate, okay? Hard to say if it's the bounce, but it looks more legitimate. That does not look like it's going to stop there. It looks like it's coming down just a little more for Dodo. Okay, DYDX looks like it's bounced. This looks like it's bounced. Okay, let's look at that on the higher time frame. Okay. So this is quite bullish in that you've gotten this move up and you've come down in 3 waves and you've taken, let's see, 32 days up, 36 days down, but let's say I do this right here. I use this right here as my orthodox high. 34 days, 34 days, okay? There's a likelihood, a high likelihood, that this is a legitimate bounce in DYDX. Let's look at it closer. Looks legitimate to me. Looks legitimate. Looks legitimate. Because this is something you put in, not today, but yesterday afternoon. You started coming up, you know. So this may already be in that mode. Okay. Let's see on the smaller time frames. Yeah, this might be it. Okay, let's look at Tron. Let's see. Okay, this is just wow. Look at that. Okay, now it's at you're literally at the 0618. So this, I'm gonna watch this. I'm gonna watch this on the smaller time frames. If you are to get a bounce, you're likely to get a bounce in this region. Okay, here we go. Let's see. Let's see. The way it comes down, it's like, wow. That is intense. Let's see. 55. Okay, let's see. But this should bounce here. And if it doesn't, then you're coming down a little lower, at least to hit the 786, which would make that a flat correction. But wow, look at that. Boom. Look, the power of impulse. This is kind of why the corrective state is not what most people want to trade. Corrections, they take forever and they don't yield that much, but impulses, goodness gracious, in the blink of an eye, you get the massive move. Kind of what I was talking about yesterday. Like, I believe the most lucrative trading, the best trading, essentially doesn't concern itself with all of this and maximizes this kind of action. Okay, whether you're scalping, you're swinging, you're in positions, like position trading, your leverage, your spot trading, you really want to go for the trends, right? And this would be the trend of the counter move. But I believe still, as profitable as this is, imagine what that is. Okay, so that's kind of why I stopped scalping. Not that scalping's bad. It's just, in terms of the work I put in versus the reward, it's just so much more rewarding, like financially rewarding and more lucrative for me to focus all my energies on building positions, protecting positions, and then once the impulse goes, just enjoy. Let's see. Let's see. I'm just looking through. I'm working, guys. I'm working. I hope you guys are well and you're taking advantage of this in some way, shape, or form. Even if you're not leverage trading, you're building positions, you're just buying. Not financial advice, of course. Let me look at that. Okay, let's leave this on. Let's look at XRP. Yeah, that's basically hasn't moved. This is most likely a flat correction. Yeah, this is most likely a flat correction right here. Like this. And just touch the 786. Let's see. Yeah, that's what it is, I think. Okay. So Bitcoin, I don't think Bitcoin has found support yet. I think it's very close. It's very close, but it hasn't yet to find support, in my estimation. What is the DXY doing? Still dicking around above the support level? Yes, indeed. We're getting close. We're getting really close. On the hourly time frame, you can clearly see this level is distributive. This is likely coming down. This is really where my bullishness is. Like, I understand everybody talking about the macro and the rates and all that stuff and what the Fed's doing, but all of that is encompassed in the DXY. This chart, all of it. As a chartist, this is what I rely on most. Not what everybody thinks is happening. Usually, the majority of people, or the herd, as we say, is going to be wrong. They're going to be off. They may not be completely wrong, but they may likely be off some. So if everybody's really bearish and they're waiting for 12K, 14K, 15K, 16K, we may dip down a bit, as we have today, right? We've dipped down more than a bit. I mean, we've come down significantly. What was this today? 6.5, almost 7%, right? Up until now. So the past 2 weeks, we've come down a total of almost 20%, which is just quite a lot. That's quite a lot. Okay, that's not the most. I mean, but it's significant. But that took 2 weeks. Okay, as you can see, it happened gradually in this leading or this ending diagonal. 1, 2, 3, 4, 5. But what I think the herd is missing is the fact that this is it. And this is the trend. And this is the counter trend. And what's coming is going to completely demolish all the narratives of crypto's not going to do anything for March. Crypto's not going to do anything for 2023. 30K is the top. We're not going to make an all-time high until 365 days from now when we get the halving, stuff like that. So that's where my contrarian thesis, and it's not just because it's contrarian, but it's because, you know, all the things I've talked about every day on this channel. That's why I'm so bullish. So even in the face of 20% down over the course of 2 weeks, I'm still bullish because my thesis is still valid. It's still very, very valid. If anything, it emboldens me even more to see these retracements to these key levels that are expected in these types of retracements, right? But when we were up here, I couldn't imagine that this would continue down in the way it has. It's just, I don't know. I wasn't expecting that. And, you know, happens. Happens. I'm doing something now. I'm going to show you. This is also an idea. Whoops. Let's try that again. Something like this. Something like this. Maybe something like that. Nah, but we've already. But what if you put down? Yeah, I don't know. It's an idea. Do you see what I mean? Basically, when you break channels, you typically go the length of the channel. So if you were to superimpose that from the side of breakout, maybe that's your target, but we've already kind of exceeded that. So that is that. I think that's pretty much it, guys. Just turned 5 o'clock. We have a new hourly candle. This stupid DXY is about to cross bearish on the hourly. It is kind of already cross bearish on the 15-minute. Yeah, that's my idea. That's my plan. That's what I'm trading. Wish me luck. Fuck. Yeah, hope you guys are doing well. Hope you're able to take advantage of this. And that is, look at this. Look at this. Look at this. This is a flat correction for sure, right here. Look at that. You just hit the 786 there. Just hit the 786. Yep. Okay. So, let's see. Let me just see this real quick before I sign off. Yeah, that's your previous support right here. Right? That's what it looks like, at least. This area right here is previous support, so we should find support in and around that area for this R weave. In any case, guys, hope this was helpful. Hope this was useful. Like, share, and subscribe. Very big moves, very big volatility, but usually when you see volatility one way, it sets everything up. So look at the opportunities. Don't get too down. Even if your positions are down, it's fine. It will go back much faster than you ever imagined. If we're truly in a bull market, if this is truly the beginning of a bull market, you'll be more than fine. Okay, just hold your positions. That's it. You know, you can be down right now, but all you have to do is be alive, meaning you have your positions be viable, right? Stay in your positions, and once it does turn around, it's going to turn around with the same or more, actually with more impulse than it did in January. Because if this is correct, then this is a wave 1, wave 2, wave 3 is, remember, the most impulsive and the most, the longest, the most impulsive, you know, the most intense of Elliott waves. So that's it for me. Take care, and I'll see you tomorrow.